Hi everyone, welcome to practice problem Unearned-02. I call this one Mastering Unearned Revenue because it's going to really put your understanding of how unearned revenue works to the test. Here we go. Mike Tiger Theater began its theater season with $450,000 in unearned revenue. So that's on the balance sheet in the unearned revenue account. 10 performances were conducted prior to the end of the fiscal year, at which time the unearned revenue account reported $270,000 on the balance sheet. If season tickets are $200 each, determine the following. How many season tickets did Mike Tiger Theater sell? How many total performances are included in the season? And how much revenue per season ticket is recognized per performance? And you may not have to answer them in that order. It may make sense to do, 3 before 1, or I should say C before A, B before C, whatever, right? So do them in whatever order makes sense to you. Take a moment, think through this, try to figure out how you would answer these questions given the information you've been given. And when you're ready, come on back and I'll walk you through the solution. All right, welcome back. So here we go. Something we have to consider in this problem is what's going on in that unearned revenue ledger. We know we started the year owing people $450,000 worth of basically theater performances. Normally you generically say services. In this case, theater performances. All right. It says that at the end of the season, we reported $270,000 of unearned revenue on our balance sheet. So what this implies is that during the season, we do a little math on this, 450 minus 270. What this implies is at some point, we must have debited $180,000. I'm going to call this a plug because I'm just calculating that. That wasn't given, but it must have happened. We must have debited unearned revenue. We took the liability away. Now, the reason you take a liability away is because you have fulfilled that obligation. And the problem tells us that we fulfilled this obligation by conducting 10 performances during the fiscal year. So now we can go another step with this. We can say, well, if we know that we had 180,000 of our liability was earned over 10 performances, that means we must be earning $18,000 per performance. Now, I'm going to go ahead and tackle B of our questions. How many total performances are included in the season? We just determined that every performance earns $18,000. We had sold enough tickets for $450,000 of total revenue. So $450,000 total sales divided by $18,000 per performance. Pull out my calculator. 450,000 divided by 18,000 tells us that we have 25 performances total in the season. All right, now that we know B, we're going to have to proceed to either A or C. Now, A wants to know how many season tickets we sold. C wants to know how much revenue we're earning per season ticket per performance. It sounds like C is going to rely on A. We're going to have to figure out A first in order to solve for C. So first thing, how many season tickets were sold? Well, here's the deal. We know that season tickets are $200 a piece, and we sold $450,000 worth. Therefore, $450,000 total sales divided by $200 each ticket works out to, let's see, 450,000 divided by 200 each. We sold 2,250 season tickets sold. All right, so that answers A. How many season tickets did we sell? That brings us to C, the final piece. How much revenue per season ticket is recognized per performance? Well, take a look. We already figured out that we are earning $18,000 per performance, and we now figured out that we have $2,250 in season tickets. Therefore, $18,000 divided by $2,250. Divided by $2,250 works out to $8. So $8 in revenue is being recognized per season ticket per performance. That is our answer to C. And now this would make sense too, if you want to kind of check the numbers here, think about it. If you are earning, let me bring out the calculator real quick, $8 per season ticket, and you have $2,250 season tickets, and you have 25 performances, there's the $450,000 in total earnings that you will have once you are done. So this one's a hard one, right? There's a lot going on here, but it requires you to have a firm understanding of what does unearned revenue represent? What is the difference between the unearned revenue you start with and the unearned revenue you end with? And how would you connect the dots between individual sales versus what's covered by those sales versus how much revenue you're making per sale? So frankly, it's just a really tough problem. But hopefully seeing it has kind of shed new light on this and kind of let you see how unearned revenue works at a deeper level. All right, that's it for this one. Hope you found it helpful, and I hope you join me for another video.